Hi everyone, Michael Ma here with Emeritus Wealth Management. Today I want to talk about something that doesn't get nearly enough attention in retirement planning conversations, and that's beneficiary designations on your TIAA accounts. This is one of those topics that people tend to set and forget. You fill out a form when you first start at your university or hospital system, and then you never think about it again. But here's the thing. Your beneficiary designation may be one of the most important financial documents you ever sign because it determines who receives your retirement assets when you pass away. And with TIAA specifically, there are some important nuances that are worth understanding. Let's start with the basics. A beneficiary is simply the person or persons you name to receive your account when you pass away. You can name a primary beneficiary who receives the assets first, a contingent beneficiary who receives the assets if your primary beneficiary is no longer living. Most people name their spouse as primary beneficiary and their children as contingent beneficiaries, but the details matter a lot, and we'll get into that. Now, here's the first thing that's unique about TIAA. You don't just have one account with one beneficiary form. As we've discussed in previous videos, you may have multiple contracts, a retirement annuity, a group retirement annuity, a supplemental plan, and so on. Each contract may have its own separate beneficiary designation. That means if you updated your beneficiary on one contract, you may not have updated on the others. This is one of the most common mistakes we see with TIAA account holders. Someone goes through a divorce, gets remarried, updates their beneficiary on one contract, and assumes everything is taken care of. But their ex-spouse is still named on another contract that they forgot about. The result? The wrong person receives the money. And at that point, there's very little anyone can do. So the first step is simply this. Log into your TIAA account and review the beneficiary designation on every single contract you own. Now let's talk about how beneficiaries work differently across account types. For your variable annuities and mutual fund accounts within TIAA, beneficiary designations work similar to a typical IRA or 401k. When you pass away, your named beneficiaries can generally receive the assets, roll them into an inherited IRA if eligible, and take distributions according to the IRS rules. But for TIAA Traditional, the fixed annuity side, things could work a bit differently. If you annuitize your TIAA Traditional, meaning you've elected a lifetime income stream, the payout to your beneficiary depends on the annuity option you elected at retirement. For example, if you chose a single life annuity, income stops when you pass away. There may be nothing left for your beneficiary. If you choose a joint survivor annuity, your spouse continues to receive income after you're gone, but the amount may be reduced. If you choose a period certain option, payments continue to your beneficiary for the remainder of the guarantee period. The point is, the annuity option you elect at that time has a direct impact on what your beneficiaries receive. And once you annuitize, that election is typically irrevocable. This is a decision worth thinking through carefully before you make it. Now let's talk about some common beneficiary mistakes to avoid. The first we've already covered, not updating beneficiaries across all contracts after a major life event like divorce, remarriage, or the death of a loved one. The second mistake is not naming a contingent beneficiary at all. If your primary beneficiary passes away before you do, and you haven't named a contingent, your assets may go through probate. That means delays, potential legal costs, and your assets passing according to your state laws, not your wishes. The third mistake is naming your estate as beneficiary. This is almost never the right choice for retirement accounts. It forces the assets through probate, eliminates certain tax advantages that beneficiaries would otherwise have, and can create complications for your heirs. The fourth mistake is not considering the tax implications for your beneficiaries. When a non-spouse beneficiary inherits a pre-tax retirement account, like a traditional 403b, they'll owe ordinary income taxes on distributions. Under certain rules, most non-spouse beneficiaries must fully distribute the account within 10 years. This can create a significant tax burden, especially if the account is large. Naming the right beneficiary and thinking about how they'll receive and be taxed on those assets is part of a thoughtful estate plan. One more thing worth mentioning. TIAA beneficiary designations are governed by the plan documents and contract terms, not by your will. This is critically important. Even if your will says one thing about your retirement assets, your TIAA beneficiary designation controls what actually happens. They are completely separate legal documents. So if your estate planning attorney has made updates to your will, make sure your TIAA beneficiary designations reflect those same intentions. Here's the bottom line. Beneficiary designations are not a one-time task. They need to be reviewed after every major life event: marriage, divorce, birth of a child, death of a loved one, or significant changes to your estate plan. And with TIAA specifically, you need to review every contract, understand how your annuity elections affect what your beneficiaries receive, and make sure your designations match your overall intentions. This is one of those areas where a small amount of attention now can prevent significant problems for your family later. If you like help reviewing your TIAA beneficiary designations or understanding how your elections affect your estate plan, feel free to reach out. Thanks again for your time. Emeritus Wealth Management is not affiliated with TIAA. This content is for informational purposes only and should not be considered individualized financial advice. Please consult with your advisor before making any financial decisions. Investment advice offered through Stratus Wealth Advisors LLC, a registered investment advisor. Stratus Wealth Advisors LLC and Emeritus Wealth Partners are separate entities.